Hey, what's going on, everybody? I wanted to bring you all this little trade idea that even if you don't get in today, you may have time to act on it heading into tomorrow. Well, today is May 25th, the day after NVIDIA had its ginormous move higher. Just for the sake of history, let's just go and look at that. So when we watch this video a few years from now, we'll just look at this monster run all the way up to 400. Boom, all-time highs. Crazy. All right, so what I want to talk to you about Boeing. All right, so this trade idea that I want to throw y'all's way is about a 22 days to expiration Iron Condor, I believe. Let me see how many days this is. 22, yeah, 22 days. All right, first talk about the setup and why and what we're into here. So first, when you look at Boeing, you can see it's just been in a tight range, right? You get my little fancy pin here. Right, you just see support and resistance, how it keeps on every time it just oscillates in this range, right? Moving averages are crossing back and forth. That's a really good key indication for price just being choppy, right? It's just been chopping back and forth between this level here. Another good way to indicate that there is no real trend is there's yellow 10x bars. It's just chopping back and forth right between support and resistance. Now, how I played this and alerted it out to the simpler trading options room and the small account mastery was just looking for this support to hold down here at basically 193 and resistance to hold up at about 216. So what we ended up doing was going out to June and putting on this Iron Condor right here. It's 10 wide. We sold the 215s and the 195s and made it 10 wide. So we bought the 125 calls and the 185 calls and got a total of $3.30 of credit. Now, from one contract basis, you will be getting a max profit of 330 and max loss of 670. Yes, you may be thinking, well, the risk reward is skewed. It's not going. The risk reward is skewed. So it's typically always skewed in Iron Condor. You're trading probability for profitability. But let me show you how this kind of works in your favor as it is skewed, right? So we're getting 33% of the credit received in this position. I typically like to at least get a minimum of 25 to 30% of the spread in terms of risk management. And so that's simply just because you can see it's almost like you're risking 300 to make, oh, sorry, you're for a max, we'll just go to dumb down the math, if you will. For a max profit of, we'll just say your reward is 300, loss is roughly 600. It's pretty close to risking two to make a high probability one, right? So we're adding technicals, our indicators, and everything for that for a high probability trade where the theta decay just works in your favor and you just need it to continue going sideways. Now, but as far as risk reward goes, this is how one other thing I like about it. So our stop loss, actually here, I'll show you this. I don't know if you can do this. So you see this little box right here where the three lines, sorry, go to set slices to break even and we'll go to our expiration date. You see how it brought these lines here at the break evens at expiration. So what you could do from here is you click the little box here and we go to set slices to chart and then bam, it's going to put our break evens on the chart. And what it did is you see how it put these lines outside of where we're projecting support and resistance to be. So we're outside the levels we're expecting to hold, right? So hopefully this paints a pretty good picture of how things, if you're just expecting price to go sideways, our break evens are outside them. Now let me show you another cool thing as far as position management goes. So if we're not going to talk about rolling, we're not going to talk about any of that stuff. That's a whole other conversation. It's even you even have to acknowledge like it has to be in the moment as far as like what is happening, so you know how much credit you're going to get, so on and so forth. But we're just going to talk in terms of risk reward and stopping out, right? So if you don't know, I'm going to move my mouse around right here. If you look right here at this box, so if price is right here, like today, it would say I would have $22 of profit, right? This purplish line is your P&L for the current day, and this blue line is your profit and loss at expiration, right? So let's just say that today the market crashes or whatever, or Boeing has news, and it comes down outside our break even where we're expecting support to hold. Look, and even if it comes down here, we'll just say we'll lose $100, right, outside our support level. So we're from to the downside, as of right now, we're risking $100 to make $300 for one position. Now, but say it has news and it just skyrockets all the way to the top, it's going to break out. If it breaks out of this range, I'm like, okay, cool, I will gladly stop out, and then I'm actually going to flip long because this thing has been consolidating for a long time, and that's going to run pretty well if it does break out to the upside. Cool, small loss, flip long, and write it. But the thing here is, say it does come all the way up here and breaks out to the up, and look, we'll lose $150, but we're still having a profit of $330, right? So you see, even though the position is set up to where we're risking two to make one, but we have levels where we feel we're wrong based off of technicals, and to where it makes our losses smaller than our losses smaller than our wins. So therefore, your risk reward is still skewed through, let's say, proper management, really. But that's really the trade. I think the setup is still there. Like I said, it's out into June's expiration. Even if you're watching this tonight, obviously the market just closed. I still think there's a setup out there for you to potentially put on and play this trade out into June as well. So I like it. I wanted to share this with y'all. Just for a quick recap, moving sideways, consolidating with moving averages crossing back and forth. The ADX and DMI are not in alignment, meaning there is no trend. That's why it's gray right here. And everything is just gray, basically. Everything gray, telling me that there is no trend. You could see support and resistance, and we structured it to where our break-evens are outside of our support and resistance levels. Like, here's break-even, the upper break-even, and here's the lower break-even. And like I said, I'm not looking to manage it until we break these levels. And other than that, I want to target about 80% of the credit received. So everyone have a great night. Hopefully this makes sense. If you do put this trade on, if you are going to do it, let me know in the comment section. I am curious to see if people will actually take these trades if I start sharing these. And also, if you found it helpful, let me know as well. I'd like to know if this is making any aha moments for you too. So everyone have a great evening, and we'll see what happens tomorrow. Take care.